Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only, and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Overnight, the market has been rather topsy-turvy as the euro and most of the other currencies stage a modest decline as the dollar index, which measures the greenback strength against a basket of 6 major currencies, rebounded after the latest reports painted a mixed portrait of the US economy. The Commerce Department final reading for this year showed that gross domestic product, or GDP, the broader measure of the US economy, grew at an annual pace of 3.2% between July and September, with the previous release at 2.9%. The stronger than expected GDP has once again given fears that the US Federal Reserve would stick to its aggressive tightening path for much longer than most anticipate. However, in other economic data, the Labour Department said fillings for the state unemployment benefit increased to 216,000 last week, which was well below forecasts of 222,000. Eyes now look to this Friday's November personal consumption expenditure report, which is the preferred measure of inflation for the Fed. As we look at the Australian dollar, we can see that the market did take a challenge to that top side, which was around 67.45 area, and rejected quite heavily. From the rejection, the market is now focusing back on that key level of 66.60. Keeping an eye on these technicals, I do feel that they are somewhat improving, and therefore could find good support emerging from that 66.60 and then look back further to that top side anywhere from around 67.45 to around 67.85 and reassess, with the firm resistance above at 68.45.55. From the tumble in the euro, as the dollar index rebounded back to 104, we're now looking back towards that key level of 105.70, which would confirm the engulfing candle and therefore put in place a target of 104.40. However, we've respected this level and may also continue due to the RSI recovering here, and therefore could still look towards that 106.65 and with a key top level around 107.20. Dollar yen, well, since the heavy tumble, the market is still somewhat mixed as it holds above the two key levels of 131.5 and 130.5. In light of the pattern, this is a flag or close to that to a bearish pattern that could see another down challenge, but will the bullish divergence here reinstate a potential rebound? I do feel the market may actually stage a recovery. However, a break of 130.5 would give me a neutral bias. Sterling took another tumble and now pressures the level of 120.25. In light of the pattern, we did see a break there, but nevertheless, let's see if the market can close under there. And if so, it would look back to lower levels of 119 to 119.60. Having taken a very strong challenge to that top side level around 1,820.30, gold fell into a bearish ambush, again looking back towards another support level of 1,770. In light of the pattern, if we do see further weakness, it would need to see a rebound from this level, and if so, still keeps the top side risk in favor. But the technicals have responded from the bearish case to a more of a negative outlook. So let's see if the bears can continue to weigh on the level of around that 1,770. Wrapping up with oil, well, the market did briefly touch that top area around $79 a barrel, but retreated. Nevertheless, the long-legged doji has put a mixed play into the market, but from the technicals, which are aligned to a bullish case all the way through, with the ADX supporting a bullish trend, the RSI married up to the MACD to a bullish case, may see further tests to that top side level. So I'm not bad in the call as of yet. And let's see if the market can take that challenge to 79.81 before likely to see another ambush. Well, that wraps it for the week and for the year. Thank you very much for looking to my views over the course of the last 12 months. So from myself, Rob Clayton, and also from ECNTRADE, we'd like to wish you all a Merry Christmas and a prosperous New Year.